market has given up the gains as we were talking about, just around the 25,000 mark, but a bigger cut when it comes to the broader markets. A lot of individual movers, but we'll discuss those with Rahul Sharma, who's joining us from JM Financial to talk to us about the technicals. Hi Rahul, good to be speaking with you. It's the day of the weekly expiry already on the first day of the month. Talk to us about what the overall expectations are for this August series, because we've had a solid run in July, almost 4% for the Nifty. Are we just likely to trend higher from here on?
Yeah, so, firstly, congratulations for the 25,000 milestone that the Nifty has achieved today. Now, the way the markets are set up, we are seeing a shift in leadership which is happening. So in this month, we saw IT reversing in a very big way. Chemicals have reversed as well. And now, slowly, steadily, we are seeing PSUs coming back into the flavor. So my sense is the market still remains a buy on dip one. So we've seen two major dips being bought into in the last 2 months, the post-election crack that we had, and then the post-budget small correction that we had, both got bought into. So I think if there is a dip, look to be a buyer at dip. The structure of the market is pretty much bullish, and there are no real signs of exhaustion or as any sort of fatigue that is setting in, especially in terms of the sectoral strength. Now, at 25,000, yes, some profit booking can come in. So maybe a 200 point, 250 point dip would be ideal for re-entry. On the downside, we're looking at 24,700, 24,750 as the re-entry range. And on the upside, I think there is a possibility of Nifty heading towards the 25,500 mark. So this is the view on the Nifty. Now, the bigger play could be in banks. Bank Nifty has been subdued for a while now. The catch-up that banks have to play, Bank Nifty has to play with Nifty is performance in the private banks that we've seen. So, August could be that month where banks play catch-up, and Bank Nifty, trading at 51,700, we feel there is a strong case for a catch-up rally to be had in banks. Led by the likes of HDFC Bank, led by the likes of PSU major SBI. And basically, the heavyweights are the ones where we are betting on, and the probability of that happening, especially the very good risk reward that these banks offer, is something that is very attractive to us.
What are your trading ideas looking at right now?
Yeah, so, goes without saying, the first one is HDFC Bank. The stock has been consolidating around the 1600, 1625 mark. So one can look to buy at these prices. Possibility of 1700 being tested in the short term. One can buy with a stop loss of 1595. Another one is on the power space. Tata Power looks very good at these levels, and the stock can extend its gains towards 480, 485 on the upside. So Tata Power and HDFC Bank are the two stocks that we are going long on.
Right. From the broader markets, I mean, though the indices on the broader markets have also come down, are there any stocks which are looking hot right now among mid caps, small caps?
Yeah, so we are eyeing the chemical space, especially the the tier 2, tier 3 stocks from the mid and small cap space. One stock that looks very good is Clean Life Sciences. The stock has come out of 2 years of consolidation, horizontal consolidation to speak of, and the volume expansion has been noteworthy. We feel there is a structured bull run that can happen in this space, which is the chemical sector, especially after 3-4 years of underperformance that we've been through. So in terms of catch-up, I think the stock can head towards 1,800, 2,000 rupees over the next 6-month kind of a period, and one can look to buy for delivery at these prices. Have a stop loss placed at close to around 8% lower from the current market price, and a good upside can be had in this sector.
Interesting. So the market-based stocks are also doing very well. Look at how Angel One has shot up once again after yesterday's low. MCX has come up. How are the charts looking for these two?
Yeah, so Angel One, the stock has been under pressure since the end of June, and we are seeing a sort of a bounce back at this point in time. I think, in spite of the, rather than the brokerage stocks, we would rather look at some, BSE Limited, because brokerage stocks might see a hit on the revenues because of the change that we are seeing in the derivative space. But something like a BSE tends to gain from what has happened, especially given the number of expiries that BSE was running. So, basically that brings us to a significant risk reward that can be had at these prices. So BSE, technically speaking, we expect the stock to head towards the target of 3,000. The stock has seen a good amount of buying in the last 2 trading sessions. one can look to buy here and on dips with a stop loss of 2400, and we feel 3000, 3100 is where the stock can head to.
3,100. I was talking about MCX. What is the target you gave there?
Yeah, so MCX has been the stock delivered good numbers on the quarterly results. Technically, the stock has given a breakout above the 4200 mark, and the current setup is giving us a target of 4500 on the upside. So 4500 is where one can look to book profits at a revised stop loss of 40 to 50.
Right. That's MCX for you. Let's take a short